All right, let's start with the alert watch. So Tattooed Chef not looking as good as it was before when it had the symmetrical triangle. So before we had something like this, something like this. But since then it's been on this downtrend out of the triangle, so it's not looking too hot. We've got an alert set for when it breaks up past this resistance. Posh. Still waiting. Wolf taking a dump. Oh, there's just no support for Wolf. It's going to be hard to tell when it's hit bottom. I'll have to keep an eye on it. Uber. Still waiting to break that resistance. Lots of stocks down today. Huge engulfing candle on Moderna today. Bullish engulfing. Let's see if Moderna's got some news. All right. So in other words, it could pretty much go either way at this point. But I do like that bullish engulfing candle there. That is nice. So they're saying resistance around 460, but we're going to have resistance way before then. Right around 287, there's some. It's not bad. may come back to that. Oof. Carvana looking really bad. Disney, bearish engulfing today. Lots of chop in the past week. Past 8 bars or so has just been chop. Looks like we may have an ABCD pattern here though on Disney. So the way an ABCD pattern works is you go A, B, C down, D up, and then the next move would be down. So we could be forming, let's see if I can draw it out here. So we got A, got B, got C, got D, and then we'd be expecting something like that. Still a gap to fill. If we look at the moving averages, we've got our 20, 50, 100, 200, and it seems to be going back and forth between the 100 MA. If it breaks down past the 200, I think we'll see that move downward. TAL still falling. Nothing to see here. BT is another one of those mining stocks, not doing so good. Smith and Wesson still have a gap to fill. I'm going to reset this alert. Actually, I'm going to set the alert for the gap. All right. Charge point coming down. See if it's at any resistance or support here. Might have a little bit of support right here. It's not looking too good for charge point though. Corsair. We need to get an alert set for this. Possible breakout on the resistance line. Dave and Buster's. Nice buyer's wick today. Let's look at the weekly. Looks like a bear flag to me. Bull flag, I mean, sorry. There's your flag. There's your pole. So we'd be looking for a breakout of this. It's like right there. Let's get rid of these. Set an alert. Bull flag breakout. That's on the weekly. I don't know, this trend channel kind of scares me though. We'll come back to it. Or we'll wait for the alert. Another bull flag on Neo on the weekly. These alerts said whenever we hit these alerts, I'll always post them in the Trading View Alerts channel and send an alert for it. It's not saying that you should enter a play, but it's just telling you that, hey, this is what's happening with this stock that we set an alert on. And then you can make a decision on whether you want to or not. I'm going to go back to the daily. So we do have our downtrend resistance line here. Set an alert for a breakout. A lot of times once a stock breaks past the downtrend resistance line, it's set for a breakout. So that's why we set those alerts like that. Hood doing hood things. Just still dropping, man. So this was support for a while, for a good 2 weeks almost. But then it just recently broke down past it. So now, I mean, when Hood first went public, their IPO released at like, what was it, $32, $34, something like that. It's less than half that now. That's like unheard of. That's crazy. But I think we're still going to see some more chop. AMC still looking bearish. Oof. However, there is some pretty good support right here that it may be bouncing off of. So we'll keep an eye on that. Might be a bounce play. Oh, look at GDRX bouncing. Let's see here. I don't know. We still got quite a ways to go before the bottom of the trend channel though. So it's kind of iffy on that. Oracle. Sitting at 89 with a $90 price target. RSI looks good, like it's trying to recover. The EMA clouds look like they're about to reverse, or try to. Oracle doesn't look bad. I don't really like these resistance wicks though. You want to take a look at PayPal, Rudy? We can do that. So PayPal, ever since the whole Pinterest deal thing, has been tanking, and it may have found a bottom, but we've got support way back here from 2020, the end of 2020, which it looks like it might be trying to bounce off of. We've got this gap here that I set a while ago that still needs to be filled. It's just not much volume though on PayPal. Lots of chop. And with it going way down today like that, I have a bad feeling about PayPal. I lost a lot of money with PayPal because I was so highly convicted. I thought for sure PayPal is a good stock. It's going to go nothing but up. And I just kept holding and holding and holding, and I lost a lot of money. So I will not make that mistake again. I'm going to wait on entering PayPal. I do think that it has huge upside potential, but not until we start to see it. Because right now it's just chop. Chop, chop, chop. If you were to get in right now, you'd be straight up gambling. You'd be gambling that this is going to bounce off of this support line here without waiting for it to actually show some sort of trend. Because it could very well continue, tomorrow it could continue past this support line and just continue downward. The problem with PayPal is that there's just way too much competition. PayPal used to be, like the go-to payment processing, for the internet. And now there's all kinds of other ones, and these companies are coming up with their own. And, it's just PayPal is not a monopoly anymore. And that's a huge problem. So I would like to see PayPal to the upside, but it's way below the 200 MA right now. So we're gonna have to hold off on that one until we start to see a better trend. Alibaba, huge bearish engulfing today, meaning it's completely engulfing the previous day's candle to the downside. This was a resistance line, which it broke past, and now this resistance line may be starting to act as support. So we could see a bounce, but then again, I wouldn't want to play that because that's a very large bearish engulfing candle. So I would never play something to the upside on a bearish engulfing candle day. Not for a swing. Zoom out a little bit. Yeah, just huge downtrend. Let's remove this alert. We don't need this alert anymore. It's basically just a support line now. I'm going to move it down a hair though. It's on our list. We'll keep an eye on it. Fuel cell still waiting on the breakout. Still waiting on a breakout here. A lot of times these breakout trading view alerts are really good to get into a day trade. When you see it break out past that line, If I post a trading view alert in Discord and you see it and it's just touching it and just starting, just wait, and then take it, open up trading view on your own, keep an eye on it, check down here for the volume. If the volume goes up past this average line, this white line here on the volume is the average volume. When the bars are above that line, that means it's above average volume. So you want it to be up above that white line to have a decent amount of volume. So if that happens and it's starting to break out past the resistance line and it looks like the RSI has plenty of room to go, that might not be a bad idea to get into a day trade. I have a video also on how to set up TradingView, just the way that mine is set up, if you like the way it's set up. But people like their own indicators and stuff, and everybody has their own personal preferences. Home Depot with the gap down today. Let's draw this gap, parallel channel. All right, so there's our gap. We have a really nice, but it did gap down. I wonder why it gapped down. Let me see if there's any news. No. There's really not. So it must have been hit by some other kind of news. You know, Home Depot is one of those home improvement companies. So I'm trying to think of what else could have possibly caused Home Depot to gap down today. Maybe it's just the SPY. Maybe it's following the SPY. Let's take a look. Yeah. Yep. It's copying the SPY. But look at this huge buyer's wick on the SPY. This actually is a good bounce here because this right here, this triangle, this is an ascending triangle. This is bullish. So as long as it stays inside this, so we have flat resistance up here, and we have ascending support down here. So in other words, it's making higher lows, but the resistance, the highs are staying relatively the same other than this little hump here. But as you can see, it bounced right off of that support line. And if it comes back up, which I'm sure it's going to eventually, and it breaks past this resistance line, we could see a major run up. That usually happens towards the apex though. But we do have room to run at least. See, where are we now? We're at 462. We have room to run at least to 470. So that's an 8-point move on the SPY. Yeah, I like Home Depot for a gap fill. As long as I honestly don't think that we're going to see a red day on SPY tomorrow. I think this is going to come up. Let's take a look at the contracts. All right. I don't like to go less than a week. So on almost all my swings, you guys will see that it's at least a week, if not more, out. So because it gives us time for the move to happen. When you're working with swings, you want to do that because even though they're more expensive, anything can happen overnight. You never know. And so you want to compensate for that just in case that happens. We look at technicals, and yeah, looking at the technicals, the stock should do this, but whether it actually will right away depends on what happens overnight. And that's the danger of a swing. So we would probably want to go until the end of January just to be safe in case we get some chop before we get a gap fill. So let's see what we got. January 28th on the weekly. Oh, they're expensive. What's our possibility? So we're currently at 385. For a complete gap fill, we'd get to 393. That's an 8-point move. That would give us 100%. Excuse me. 10-point move would give us 100%. No. A 10-point move would give us 300%. Almost. What I'm looking at here is the cost of the contract. And then the cost of the contract if we were to make a 10-point move. So it's 233 here, it's 610 here. If we were to make a 10-point move, that's almost 300%. Problem is our price target for a gap fill is 392 or 393. And so these contracts are kind of expensive. Let's take a look at 21. Still a little bit on the expensive side. If we were to go 1 week out, not even, for 4 days, I don't like doing these. And they're still kind of expensive for a 4-day contract. So I'm going to skip Home Depot. Excuse me, guys. I need to grab a drink. Okay, sorry about that. Let's see here. All right, so that was Home Depot. I'm bullish on it. I think it's going to gap fill, but at the same time, the contracts are kind of expensive. A firm. So this gap was filled in the past week or so. So we can get rid of this gap. This is no longer in play. Let's look at the weekly, see what kind of wicks we got going on. That looks pretty good, actually. Nice buyer's wick on the weekly. This could definitely, I've seen these a lot, and a lot of times this will signify a reversal. Evening Star, Doji, or something like that. I can't remember the exact name of what this is called, but a lot of times this will signify a reversal after a downtrend on the weekly. So if we were looking to get into a play on a firm, we probably want to go out a bit because this is the weekly. Again, the next week doesn't even start until January 18th. So if we do have an uptrend, it'll probably look something like that. And then if we look at the date at the end of that trajectory, it's March 21st. So that is going to be extremely expensive if you were to go out that far. Let's take a look. Yeah. So very high probability of profit, also very expensive. So that would be for like the bigger accounts if you were to go out that far. But if we look at the shorter time frames, so let's say we were to go to end of January or February. Say January 28th, for example, And then price target around 86 or 85, I'd say. Those contracts aren't that bad. They're still kind of expensive though. I don't like the theta either. That's kind of a high theta for me. A 0.16 theta. I just released a video on theta and what it means. And each day, the contract is going to lose $16 in value each day. Now they're kind of expensive, so that's not extremely significant, especially if the price of the stock increases. That's what you want the price to increase so that it can pay for the decay. It pays for the theta. I probably should have added that into the video, but it was the main point of the video was just to understand what theta is and what it does. But this theta is kind of high for me. I like theta to be like around here, 5, 4, 3, 2, stuff like that, with a 0 before it. So not a fan of, I mean, I'm bullish on it, but again, it's another one of those expensive ones. Maybe this is like a day trade stock. This is one of those ones where you get in and you get out in a day. See what else we got. Sophie's dead. Sophie's out of play. I'm gonna remove this. Uber, take this off the playlist. We're not playing this today. We're waiting for a breakout. Palantir, another one of those possible reversals here. I almost like Palantir. Let's look at the daily. Problem is like it's trying to catch a falling knife because there's no support. I don't see any support here. Right where it's at, I don't see support. But the RSI is extremely oversold. So right now what we're looking at is the candlesticks and the candlestick patterns. We're not really looking at any kind of trend. We're not really looking at any kind of pattern other than the candlesticks. So the candlestick pattern tells me that this is a possible reversal. And that coupled with the RSI and the volume, you see here how the volume is way higher than the average volume. Just because it's red doesn't mean that it's seller volume. This is all the volume all together. This bar is just red because it's currently down for the day. But there's a lot of buying pressure. So let's take a look at Palantir. So I think we could see a reversal on Palantir tomorrow. Palantir looks much better with the contracts. We got a 47 delta, which is very nice, and a 02 theta, which is also very nice. So let's see what our risk to reward is. So we're currently sitting at $16. If we reverse, let's say $1, let's say $1 move, what would $1 give us? So say we got the 16.5 and we went up to 17.5. It's almost 100% for a $1 move. I like Palantir. I'm gonna add this to the playlist. This might be one of the top plays for the day. We'll let the day, it's power hour now, so we'll just wait and see what it does. We might be able to get a cheap price by the end of the day. It's already on the playlist. Charge point, take this off the playlist. Oracle, I don't like the seller wicks. Take that off the playlist. GDRX, we zoomed out on this one and you guys saw that it's still a lot of room to go back down to this bottom of this channel. Even though we got some nice buying pressure today and a low RSI, still, you know, it's a very good chance we could see a run up tomorrow, but at the same time, there's just way too much room for the downside. So I'm gonna say no to that. And then there was Moderna. I don't like this end of the day seller's wick though. I think PLTR is our top play right now, but we'll keep looking. Monster, just huge moves with Monster, but the contracts are not great. I think we still got room for downside on Monster before it makes another leg up. Might even come all the way down to the bottom of the channel. Disney was another one to the downside. Bearish engulfing. A, B, C, D. And then down. Add Disney to the playlist. Let's take a look at the put contracts for Disney. Okay, so for PLTR, we were looking at 16.5. So I'm gonna just add this to my list over here so that I've got it saved. All right, Disney. So we're looking at puts. That's over on the right side. For an expiration date. Yeah, I'd say end of January. So this is January 28th is probably good. The way puts work, if you guys don't know, is you're basically locking in the price, the current price, or your strike price is the price that you're locking the stock in to sell it at. So if we were to lock in a strike price right now of 156, no matter how far down this went, that means we can sell it at 156. So when you look at a chart and you look at a play to get in for a put, you don't want to say, okay, we have this much room. It's going to drop down to say 145. So that's what my strike price will be. You may gain extrinsic value a little bit on that, but you're going to be much better off finding a higher strike price for puts. So if we can come down to 145, I would say go somewhere in the middle. So I'd say maybe 152. 152 sounds good. 152.5. Theta is not terrible. As long as it's under 0.10, I'm okay with it. As long as delta is over 0.30, I'm okay with it. It's not awesome though. Let's check January 21st. January 21st is right here. Oops. All right. So we probably want like a 153. We probably want the 155 for that. Better delta, theta is not so great because it's less time. Let's see what our risk to reward is. Let's go even. No, I'm not doing 14. So we'll say January 21st. So let's say we did a 150. All right. And the stock drops $3. $2, $2.50. That gives us less than 100%. Contracts are not ideal for Disney, guys. I'm going to pass this up. Let me just address this real quick. So Alamary was wondering earlier why there's a call for AMC and also a put, but there are different timelines, and the call was on a shorter timeline. The AMC call. Sorry about that. Let me mute my phone. All right. Some people wonder, why would you put out a put play and then a few days later put out a call play? Well, a lot of times, you know, a stock doesn't just go in one direction all the time. So we play what we were given. And so if it's going up, it looks like it's going up, then we're going to play the upside, even though we might still be bearish in the long term. So let's see, where were we? Blink. Not loving it. This didn't happen. This was old support, might turn into new resistance. We'll just have to keep an eye on it. Blue apron. Choppy downtrend. We'll set an alert for a possible breakout if it breaks past that resistance. And all of these lines are, most of them anyways, all of these drawings are on the daily charts. That's what we want to look at our patterns is on the dailies and the weeklies, and sometimes even the monthlies. Anything less than that, you're looking at day trading. Sometimes you can look at the 4 and 12-hour charts for a little bit more of a detailed example, but typically when you're looking at swing plays, you want to look at the dailies and the weeklies. Weed stocks is chopping. Wish. I wish. Oh, let's get rid of this line. Still a pretty huge gap to fill. Let's draw this downtrend line here. Quite a ways to go. I'm not even going to set an alert on that yet. It's just in a pretty steady downtrend. Clean spark. Wow, all the way down to $7. I remember when this thing was way up here, you know, as a $20 stock. Zoom way out. So we've got support right around there. This old support may act as resistance. We might start seeing a trend channel here. Set an alert. I don't know if it's going to bounce or go past it, so I'm just going to call it hitting support. Canopy growth, another weed stock, rocket. Not looking very good. Choppy red candles. These we all looked at. Purple. Ugh. No bueno. It's no bueno. Almost like purple to continue to the downside, to be honest. Wonder what the contracts look like. PRPL. End of the month. Puts. For this, you'd probably almost want to go in the money puts. So if we set our price at $10, here, let's draw it out. First of all, let me get rid of this Fibonacci. So let's draw a horizontal line and set the coordinates for $10. This would be our strike price if we were to get that super cheap contract. So we would need this. We would need to hit this by January 21st. Yep. No, I don't like the $10 one, but I would say if we were to get into this, we'd have to go in the money. So that would put this at, say, at 12.5. Puts us up here in the money. So even if the contract expires you still have intrinsic value left. So it's not, it doesn't expire worthless. There sure is a lot of volume though. This would be a lotto. This would be a lotto. It's a 10-cent spread. Basically betting that purple is going to continue downward. Hit that $10 mark. And then keep going to support. Keep with that. Yeah, I like it as a lotto. We would have to come down to the support before here, and I think it's totally possible. Almost got an inverse cup and handle. Yeah, I like that one. I'm gonna put that out. Copy. Add this to the playlist. All right, we'll come back. We'll come back to it. AT&T. Choppy. Riot Blockchain, Corsair. Not seeing any resistance or support, but I also don't like this wick. Dave and Buster's, look at that buyer's wick. Bounced right off of that trend line. Not much volume though. Neo bouncing off support. Look at the weekly. Lots of buyer wicks on the weeklies. Volume is super low. Delta Airlines, bearish engulfing. Might be looking at a downtrend reversal here on a bearish engulfing. And it's right at this resistance line. We check news, Dow. Oh, you know what? This is a lotto. Okay, so on January 13th, we got earnings coming for Delta Airlines. With the airline shutdowns and the Omicron and all that, I'm guessing earnings are not going to be great. But at the same time, that could already be factored in. That's why these are lottos. I'm going to put this earnings play out as a lotto play. Let me take a look here. DAL. Yeah, earnings are Thursday. So If they have bad earnings, this sucker's coming down. We're gonna do the 40. All right, I'm gonna put this one out right now. $40p. 99 cents. 121, 22. 40% stop loss. Put and swing. Lotto. Extremely risky. Earnings on the 13th. Okay. All right, and then our other one, go back to our playlist, was PLTR. So for PLTR, I'm actually going to enter that Delta Airlines put real quick here. So I'm in it with you guys. Set it at $1. If I get filled, I get filled. If not, then I don't. And I got 3 contracts. All right, Palantir. All right, we were looking at this guy. So we're looking at 16.5C for 128. Yep. 80 cents. PLTR. enter this one also after I put out the alert. $16.5C. 80 cents. 128.22. 50% stop loss. Call. And I will jump in that one with you guys. All right. So that's it for the plays for today. If you guys have any questions, feel free to ask now. Otherwise, I'm going to end the stream for today and we'll pick it up a Wednesday, I believe. Yep, Wednesday. All right. Thanks for tuning in, and we'll see you guys next time.